Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another daily cryptocurrency market update. For those of you that are new around here, we update a video every single day at 1 p.m. UK time, where we not only look at the cryptocurrency market, but we look at markets surrounding it and try and work out where we are heading. So before I start this video, guys, if you can do me a massive favor, drop me a like and a comment. It's greatly appreciated and really helps me and the channel out. Without further ado, let's get into it. What are we going to be talking about today? We're going to be looking at the Bitcoin price structure that we're currently forming. And actually, we're seeing a very healthy reaction to a key level, which is 25K. Now, once you break this 25K, and there's a couple of routes that we'll look at how you get to break this 25K, you are essentially set, in my opinion, for significantly more upside. And we know we're in this weird kind of place for the cryptocurrency market because we're not a regulated space yet, but that is coming. We've seen huge advancements at the start of this year for that with the SEC and what they're doing. And ultimately, institutions are just waiting on the sidelines to get into this market and pour trillions of dollars into it. Not just institutions, you'll also have that from retail once it becomes regulated and offered across the board. I mean, imagine when this stuff ends up in pensions, so on and so forth. That is all still to come, guys, so it's a very bright future that we have. But the current price structure that we're seeing for Bitcoin is actually a healthy one, and it's very much following suit from what we've set out from the start of the year. Now, the bears are getting very excited, having been pretty punished from sort of the 1st of January onwards. However, they may be getting a bit sort of prematurely excited. So today, we have the Fed speaking. We've got a number of economic data coming out. The Fed speaking at 2 p.m. UK time. This is where they're going to release their minutes and kind of outline what they want to do. Markets will react to this, but it's largely going to be a nothing burger. And why is the cryptocurrency market falling? Well, I want to tackle that because we've spoken about liquidity. Liquidity is largely driven by rates. It's why you've seen this dip in the US M2, the Euro M2 at a bit of a later date, and even the Japanese M2, which has stayed largely stagnant. But if we looked at the GDP M2, GBP M2, Great British Pound M2, it would look similar to these. However, China's continued to expand. And actually, this expansion that we've seen has fueled the markets largely. And there's a lot going on. But essentially, rates are determining liquidity. Liquidity is determined by inflation. We saw sticky inflation and we saw rates get priced in higher. We can best see this through a number of things. But one way we can look at it is through the yield curve. So really, since the start of February, this has gone up, which is the 2-year, sorry, not the yield curve, the 2-year US yields, which means that rates are, this you could essentially use to track rates. If you look at Fed funds and take an historic view and take that bad boy off log, you can see that this typically precedes rates. So what you've essentially had since the start of February is rates are getting priced in higher. We've already shown you all this. And the markets generally have sold off with this. Okay? So you can see as rates got priced higher, this is the S&P. The Dixie, for example, has gained strength on this because if rates are deemed higher, it means a stronger dollar, i.e. more demand for it. But Bitcoin's largely ignored it. You can see actually at the start of sort of February, it tried to follow suit with everything, but then got this real sort of bid up. And the problem with what's happening with most markets, certainly let's just use gold. Actually, let's bring gold up to show you that pretty apparently, you can see gold really got hit hard on rates going up. The problem with that is it's kind of like Bitcoin's running against the kind of peeing in the wind, if you get what I mean. It's basically, it's going to get tired eventually. It can't persist against a sort of an anchoring macro backdrop, which is kind of causing it to run out of a bit of steam here. But where it's run out of steam is a very, very key level. Once you take this 25K level, and we can get off the see what draw we've got on here. Yeah, so there's a number of ways that this plays out. And what we'll do is just get rid of all that and redraw it. This is essentially something we've been looking at for a while now. We did say that there's a possibility that your neckline is here. But this, of course, and many technical analyzers will be going crazy at this, is not a perfect neckline by any stretch of the imagination. So we were essentially looking for this as a head and shoulders. Remember, this is not on log, but we can put it on log. And then that might be a break, retest, upside. This is a very thin block of orders here. You know, if we actually go ahead and look at this, you know, we could even do it from March 2020. There's not a lot. In fact, the thinnest price action that you've seen is here in terms of volume by price. So it will not take you much to get back into the sort of 30K realm. You know, and we've said this is on the cards from the start of the year, and I actually think you're going to go above and beyond it. Certainly if we've got the neckline wrong here. And actually, you have more of a perfect neckline, which would be here. So essentially what I'm saying is that you could be looking at this. Now, this is perfect for me. You know, happy to see if this is the neckline and we're still to get that right shoulder forming, and this isn't the right shoulder and it's just a part of the head. This actually suits me pretty well. You know, this isn't something that we're worried about at all. If you guys want to find out what I'm doing, what my group's doing, you know, we've done very well this year. The real question is, where does this head come back to? We're going to want to see it. You're not going to want to see sort of 17K run. I would probably say, actually, moving to the daily time frame, you're not going to want to see sort of 18K ran. Yeah, I wouldn't want to see this sort of chunk ran. Your 18K, I wouldn't want to see that ran. And to put a fib tool on very quickly, you know, I wouldn't want you to come back below here. So I wouldn't want to see 20K ran either. So how if this is indeed the neckline, and this would give it a more sort of perfect head and shoulders with these as your two armpits, you know, you could be looking at maybe a shallow correction, and then it's before, you know, in no time you're back at 30K, or you could be looking for more of a deeper correction, or there is the possibility that you pop out the top, maybe on some sort of news, and then you come back, you know, and you visit sort of down here before you then see that continuation. But I'm very much fixed on continuation until you take these levels here. So this is the 50% of your fib, and then you're looking at, you know, if we ran this shoulder, that would be cause for concern for me, and then we'd actually be looking at downside targets here. So until these targets get met, we're not really going to worry about them. We're fixed on more upside. We're positioning accordingly. Again, if you want to find out more about that, feel free to join my Patreon. There's lots of interesting things going on right now. We know that Hong Kong are now looking to allow retail traders in a regulated manner to get involved in the crypto space. Now, this is interesting because there is lots of talk about actually China as a whole backing this softly, and certainly, is it Lao? You know, sort of giving the green light to this and looking to really use Hong Kong as a kind of fintech hub. And if you saw an allowing of Chinese citizens to be able to buy Bitcoin and Ethereum again, that's a massive pool of liquidity that will hit the market. Certainly, as we know that the Chinese party are very much, you know, in an expansive stage. There's lots going on with BRICS, lots going on with all this other stuff, which we can talk about at another point. But you can see just how important liquidity is. You know, this is the USM2. Look at it. You know, it's very much telling you why markets have sold off. So this is really what I'm looking at moving forwards. Number of plays, you know, we'll see what happens. But I think actually if you take the targets, if this is the neckline, and you guys can do it for yourself, but if we take it on a log, you've got targets of 40K plus. And if you take it on a non-log as a target, we'll recycle the stick here. You're talking about 35k. So the real question is what happens here. I think it looks pullback-ish. You know, we highlighted this yesterday. This is not a nice structure. But Bitcoin's in this kind of magic world right now, in the sense that, you know, it's formed. There's been many points where people have thought there was going to be a deeper correction, and there just simply hasn't been. So a kind of message that I'd maybe leave you with is don't be too greedy. This is interesting. But this doesn't look like great structure to me at all. And you're, of course, falling out of it. So maybe look for, you know, certainly these levels here is what I'd look for. And then look to play it down. Certainly here being a pretty significant one. But this is key price level that Bitcoin's coiling up at. I think it's going to do exactly that. It's going to coil up. It's going to break through, and you're going to be looking at 30k, you know, potentially 40k Bitcoin this year. I think that's very much on the horizon until proven otherwise, and we've set out the levels where we'd be proven otherwise. So remember, the FOMC speaking today. We've got rates coming up in next month, and we'll see what kind of happens with that. So we'll see what the Fed says today, and then we'll deal with it accordingly. Markets have sort of sold off in expectation of it. Very common with these events. Stock market's not doing amazingly. We did have this as a kind of move for the stock market, but you've broken out here. Yeah, very much looks like you could be set for more downside here for the stock market. Gold's not having a great day. You've got to kind of let this dollar strength play out. And then once you get a weakening of the dollar, you get a weakening of the yields, then maybe it's time to start looking at continuation to the upside. And we'll see where the chart is then. So if the chart's here and you get that turn, and make your own minds up. All I've got for you in this video, guys. You enjoyed the content, like, it's always appreciated. So is a comment. And I'll catch you all in the next one. Thanks a lot for watching, ladies and gents.